Afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, August the 19th, and just wanted to take some time to talk about what we saw in markets last week and kind of what we see in markets moving forward heading into this week. And volatility has really entered into the marketplace, so we're going to go over some tips and some things to do when volatility has entered into the market for your individual portfolio. So last week was a pretty strong week in the markets. The S&P 500 finished the week up 90 basis points. Pretty solid week in the markets. The Nasdaq and Dow finished in positive territory as well. The mid caps did well, but the small caps, which had been leadership for the beginning of this year, have continued to fall, and you're seeing the divergence between large cap and small cap really come out, and that has a lot to do with investors' concern about the reopening of the economy. Has the Delta variant put a slowdown? Have we seen peak growth? Have we seen peak earnings growth? And you're seeing some profit taking happen in the marketplace. And your small cap names are your more cyclically oriented names and the more economically sensitive names, and that's why you're seeing some selling pressure in those small cap indices. So with that being said, as we entered into this week, we saw over the weekend, we had some news headlines come out, some geopolitical headlines come out of Afghanistan, but markets really rallied off of that on Monday and ended up finishing the day stronger. But as we entered into Tuesday, we got retail sales numbers for July, and they were actually negative year over year, and that's what really started to cause the volatility in the marketplace with the negative numbers. And investors say, have we seen peak growth? Are we going to continue to grow from here? And don't get me wrong, it's not that we're not continuing to grow, we're just not growing at the rates that we saw at the pandemic levels. Stimulus is running out, the liquidity is still strong in the system, but the stimulus money is running out, and we're not going to continue as consumers to constantly buy big ticket items year after year after year after year. So instead of being a sharp line up, you see the sharp line up and you kind of start to flatten out a little bit, but there's still steady growth. But what happens when that steep starts to slow down a little bit is you're going to see some people start to take profits and say, are my equity positions, are they overvalued? Now that we see that we're slowing down a little bit, are my stocks really worth what they're worth at these values? And I'm just going to go ahead and sell them, take my profits, and wait to see what happens. And that's when the volatility enters into the system. So what do you as an individual investor do when volatility comes in? Well, this is a great opportunity for you to review all of your holdings that you have in your individual portfolios. And if you have some that are lagging behind, whether it's because of the industry that they're in is out of favor, or we all wish that we could always pick nothing but winners, but sometimes we pick ones that just don't perform the way that we anticipated them to perform. And that's okay. When we have volatility like that, go ahead and get rid of those names out of your portfolio. It does two things. Number one, if you're at a loss, it allows you to get some losses booked for your tax purposes. It allows you to free up capital to make additional purchases. Remember, when the market's volatile and you see big drops, or you see drops in the market, don't look at that as a scary thing. Look at that as the market's on sale. Your favorite items are now cheaper today than they were yesterday, and that gives you a chance to take that money that you've just sold from your losers to buy some ones that you've been looking at or wanted to add positions to, but have always said, that's just too expensive for me. It's a great opportunity for you to do that. And it allows the tax losses, so for any future gains that you sell, you can offset those gains with the losses that you're booking during these volatile times. And go ahead, and when you make that sell, put that cash to work. Identify some names that you've had out there that you really wanted to purchase but haven't been able to purchase because you just felt they were too expensive. But that is a key to that, of looking at volatile markets, is making sure that you're looking at the opportunities that are available for you. Don't panic. Don't rush to sell everything. No one can call a bottom. No one knows when the bottoms of these volatile times are going to be. However, we don't anticipate them to be too tremendously strong because there's so much liquidity in the system, and we have seen time and time and time again, as the market drops and has a 3% pullback, it immediately comes back. And it's happened 3 times this year so far, and we anticipate the same with the volatility that we're seeing now. Also, we're entering into some of the most volatile months of the year anyway, historically. school starting, people's minds aren't as into the market and investing as they normally are. So just stay steady, stay the course, and if you have questions on how to take advantage of any of these opportunities or how to better navigate your individual portfolio, feel free to give us a call. We'd love to talk to you and happy to speak to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your day. Thanks so much.